Profits from oil and gas exports allow Russia to spend record funds to finance the war against Ukraine. The sanctions policy of Kyiv's allies has significantly reduced the revenues of the aggressor country. The Russian Federation has had to develop supply schemes using so-called shadow fleet, accept losses, and develop new logistic chains. But oil and gas exports are still the basis of Russia's budget revenues. In 2025, Moscow plans to spend more than 13 trillion rubles on the war against Ukraine. It has also increased other expenditure articles in the budget. But analysts say such plans of the Kremlin may fail as Saudi Arabia, the largest oil producer, intends to increase its oil output.
Saudi Arabia is ready to abandon its unofficial price target of $100 a barrel for crude oil as it prepares to increase output, in a sign that the kingdom is resigned to a period of lower oil prices. Officials in the kingdom are committed to bringing back the production as planned on December 1st, even if it leads to a prolonged period of lower prices, the people said. From the Financial Times publication.
Experts say that it is too early to assess the consequences of such a decision, but even rumors that the largest oil exporter, Saudi Arabia, will increase oil production are affecting the market.
Even the very talk about it already makes the oil market react in terms of prices, and we see that the third Lebanese-Israeli war has practically started, and even this factor did not affect the oil prices as much, although in another case it would probably have had a very strong impact.
There is a negative trend in oil prices on the market. This is explained by a drop in demand due to the fact that one of the largest importers, China, no longer buys such huge volumes as it used to, and this trend has already affected Russian fuel exports. While the price of a barrel of Urals in Baltic and Black Sea ports used to be $70, by mid-September it has fallen below $60 price ceiling that Ukrainian allies set for Russian oil.
Export values at Baltic ports were down week-on-week by about $1.2 a barrel, while shipments from the Black Sea fell by about $1.4 a barrel. In contrast, prices for key Pacific-grade ESPO rose by about $1 compared with the previous week. Delivered prices in India dropped, falling by about $1.2 a barrel, all according to numbers from Argus Media. From the Bloomberg publication.
The Kremlin has set the price of Urals at $70 per barrel in its 2024 budget, and in 2025 Russia plans to sell oil at $69.7 per barrel. According to experts, this is practically impossible under the current conditions.
Most likely, if we take a medium-term and long-term perspectives, this trend will remain the same. If the slowdown in China's economy continues, if Trump wins, and if the Saudis increase oil exports, and there is more or less stable situation in the Middle East, then I think this figure of $70 is very, very optimistic for Russia.
Earlier, analysts at Citigroup suggested that in 2025 the price of oil will fall to $60 per barrel due to a surplus in the global market. The forecasts were made even before the information about Saudi Arabia's plans to increase production. Reported by Anastasia Tarnavska, Andriy Dmitrenko, UATV News.